shares are down a whopping 9% after the company reported an earnings miss driven by bad weather. The company did say a January surge in bookings points to future upside, and Wall Street analysts seem fairly confident that that positive 2023 guidance will be enough to make up for the disappointing Q4 results. But it is interesting to also see Airbnb shares trading to the downside today on the heels of Expedia's miss. The New York Times was actually out with an article about how short-term rentals, they're fumbling ahead of the Super Bowl in Phoenix in particular due to the high demand that we've seen in a lot of these different travel companies. I don't know if you guys have noticed that.
No.
I think there is a lot of competition.
Just specifically in Arizona.
Specifically in Phoenix for the Super Bowl. A lot of these people bought homes in 2021 thinking, oh, I'm going to make like 10 grand a night for the Super Bowl. But now there's just so much competition in the short-term rental market that could be another headwind for some of these travel stocks.
There's also so much building in the Arizona area. And if you haven't been to a Super Bowl in Arizona, which I have a couple of times, it's a massive area. You're talking about an hour between the stadium and Tempe and Phoenix. There's just a huge, enormous swath of area. You do well when the Super Bowl city is a smaller, concentrated area. So that's, in particular, I think, what's happening there. But I read through the transcript of the earnings call when it comes to Expedia, and the word that came up at least a dozen times was their loyalty members. Their CEO, Peter Kern, said they entered 23 with 70% more active loyalty members than any prior year, and that's who they monetize the most. So they're very excited.